If you apply for 5 car loans in a single week just to see who gives you the best interest rate, you are leaving a permanent footprint on your Australian credit file. Looking at this credit file mock-up, you can see the trail of applications. Even if you turn down every single offer or cancel the application before signing anything, the fact that you asked for the money is permanently recorded. Future lenders reviewing your file see the specific category of credit you requested and the exact dollar amount you sought. This applies across the entire borrowing spectrum. We're talking about credit cards, home loans, car finance, store finance, and personal loans. There is no universal, government-mandated number of applications that guarantees an automatic rejection, but the immediate desire to shop around for guaranteed approval creates a long-term visibility trade-off. Firing off applications to see what sticks inadvertently signals financial desperation and high credit-seeking behavior to the exact lenders you want to impress. Look at this diagram. It starts with the credit report, your raw data. This feeds your credit score, varying by bureau up to 1,200. Both feed the lender decision, mixing data with personal income, visa status, and living expenses. Understanding this 3-part system matters because a high score does not guarantee you a loan. Relying on a single metric hides the complete risk profile a lender is actually evaluating. When you submit an application and the provider checks your file, they log a credit inquiry. This logs 4 specific things: the date, the credit provider, the product type, and the amount you sought. This comparison table shows what an inquiry deliberately leaves out. It will not state if the loan was rejected. It won't show if you withdrew the application, or if the car purchase simply fell through. It only logs the request. Looking at this timeline, a credit inquiry remains on an Australian credit report for exactly 5 years. That timeline is distinct from a missed payment, which is recorded in your repayment history when you fall more than 14 days late on a bill. It is also completely separate from a legal default, which only goes on your record if a payment is at least 60 days overdue, totals over $150, and proper notices have been served. Do not confuse an inquiry with a default. An inquiry simply proves your intent to borrow. A default proves a failure to pay. If you are approved, your open credit limits are calculated entirely separately from your inquiries. An empty credit card with a 0 balance still counts as available risk. Closing an unused credit card account might clean up your available limits, but it will not erase the original application inquiry from that 5-year record. Accessing your own official credit report to check these records is logged as a personal access request. It is completely safe and does not act as a credit inquiry. The inquiry system provides lenders with a record of your potential future debt load, which they evaluate alongside your current active accounts. Watch what happens when you use an online comparison website or an auto broker without reading the terms. A single request to find the best deal can result in them submitting multiple formal applications on your behalf, instantly clustering your file with inquiries. Everyday marketing terms regularly disguise formal hard inquiries. Phrases like pre-approval, get approved, or 0% interest store finance can all trigger a permanent file check. Under Australian privacy laws, a credit provider must disclose their reporting practices, but they do not need a giant standalone button that says, "I consent to a credit check" to lodge an inquiry. It is often buried in the terms you agree to by clicking Submit. This flowchart shows how to protect yourself. Before clicking Submit, explicitly ask the provider, is this a soft marketing estimate or a formal credit application that will touch my consumer credit report? Buy now, pay later services are now regulated credit. Opening an Afterpay style account can and often will trigger a formal credit check. Racking up a high number of buy now, pay later applications influences your credit score and appears highly risky to future mortgage lenders who scrutinize your spending habits. When investigating your history, you need to check both Equifax and Experian. These are 2 different reporting bodies, and they can hold entirely different application histories. While your future lender will heavily evaluate your income and bank statements, that underlying financial data is not supplied directly to the credit bureau. Digital convenience masks a hidden cost. Trading a quick retail checkout or a casual online rate check can unintentionally lock you into a 5-year penalty box if you fail to read the disclosures. This dashboard maps out common borrowing traps, starting with the car buyer. If you let a dealership send your file to multiple banks to find a rate, it results in an immediate cluster of inquiries. to a future lender, it looks like you are desperately trying to finance a vehicle you can't afford. Now let's switch to the thin file migrant. A newcomer might apply for 5 random credit cards just to build Australian credit. Instead, this flags as high credit-seeking behavior and actively damages their score. If we look at the temporary visa holder, they might be rejected for a loan and assume their credit score is terrible. In reality, a denial due to the time remaining on a visa is a strict product eligibility issue, completely separate from a bad credit score. Then there's the rejection spiral. This is the applicant who gets denied, panics, and immediately fires off 4 identical applications to different banks, driving their score lower with every click. Every financial background requires a tailored approach. Firing off blind applications to solve a problem only amplifies the risk and ensures further rejections. Do not pay high fees to credit repair companies promising to delete your negative history. Accurate inquiries cannot legally be erased just because they are inconvenient. If you are struggling to make payments, contact your bank and utilize a financial hardship arrangement. Entering an arrangement does not inherently lower your credit score, and it protects you from severe default listings. If you check your file and see a personal loan inquiry from an unfamiliar bank, that is an immediate red flag for identity theft. This flowchart outlines exactly how to respond. Contact the lender involved, lodge a free correction request with the credit reporting body, and enact a temporary credit report ban. A credit ban is strictly a protective tool for fraud. It cannot be used to hide genuine applications or arbitrarily boost your score. You have the right to access your free credit report once every 3 months, or immediately if you have been refused credit within the previous 90 days. The Australian Consumer Credit Framework offers powerful, free tools to protect your identity and correct mistakes, but they cannot be weaponized to hide your genuine borrowing history. Before you apply for your next loan, follow this sequence. Always get both your Equifax and Experian admit a new application. Compare products and rates entirely outside of formal applications. When you are finally ready to proceed, explicitly ask the provider if the next step creates a formal credit inquiry. Taking control of your credit profile means replacing panicked rate shopping with deliberate, informed decisions. That is how you protect your borrowing power for the years ahead. Please note, all credit reporting rules and guidelines mentioned in this video were verified on 11 August 2026. This is general financial information, not personal advice or a guarantee of any specific lender's policy.